Alright guys, welcome back to the D phase. In today's lesson we are going to talk about the AMD model. So probably most of you already know what's this, but we still have to go through this. So yeah, on the left side we have a bullish AMD model, on the right side we got a bearish AMD model. So A stands for accumulation, M stands for manipulation, and D stands for distribution. Again, accumulation, manipulation, distribution. So AMD model was created to in some way get the retail traders manipulated and after that to liquidate them. As we can see on the left side we got some price in some range, which well, in this time retail traders are waiting for their position, waiting to price move, decides to go up or down. When the price breaks this low here, so when the price breaks this low here, they get into their sell positions. If the price went up, they get into the buy positions. After that comes the manipulation phase. So the retail traders get into their positions, putting the stop loss above these highs here, and after that targeting some low, I don't know, some zone of interest. I don't know what they even target. So yeah, and after that the price went up and stopped them out and they lost the money. So you don't want to lose the money. So imagine after the price left this range here, as sharp the movement is, the manipulation phase is, the distribution phase will be stronger. So if it's very sharp, the distribution phase will be stronger. So in the manipulation phase, we'll see that the price went down from the low into some zone of interest. It could be, so that zone of interest can be every, like imbalance, order block, rejection block, inversion fair value gap, so anything. But you'll learn what's a strong zone of interest, what can hold the price mostly, and after that the price went up, breaks this high here as well, and even targeted some higher high or some buy side liquidity above these highs. But yeah, it will probably collect just this high here, and after that you can know only in accordance with time if the price wants to go even further. So on the right side we got again accumulation. Also the accumulation I call consolidation or a range. So we are here in some consolidation. After that the price went up, formed a high in some zone of interest, and after that the price went down to collect this low here and get the retail traders liquidated. So that's pretty much all of it for the AMD model. Now I'll show you some example on the real markets. So we are here on the 1 hour time frame. You can see a lot of AMD models, but I mark this one here. So we got here the accumulation, the range phase. So the price went up, down. After that we got the manipulation phase, where the price formed a low into some zone of interest, which is this liquidity void on the left side. After that comes the distribution phase to collect this high here, the high from consolidation or accumulation, and even further to collect the buy side liquidity, which is this one here. So as we can see, the price went down, formed a low, leave the body above 50% this liquidity void. After that, so the price went up. After that made some retracement, came back into the OT zone, and after that went up to collect the high here. If we get on a smaller time frame, we'll see one more AMD model inside this AMD model. We are here on 15 minutes time frame, so that this here is the bigger on a higher time frame AMD model. Also as well, we can see here again accumulation, manipulation, and after that the distribution phase or D phase. So again the price went up. If you see some picture on a higher time frame, probably you'll see that on the smaller or lower time frame. And I mean, this is a really clear picture of an AMD model, but it works only in accordance with time. So please guys, don't be silly to enter your trades without knowing the time and how to manage it all together. So, and after that the price went down, stopped on some zone of interest, which is this imbalance, fulfilled it, leaved it. We got again this FVG on the left side, just touched it. After that we got the price movement up, and again the price just touched the OT zone, and after that we got the distribution phase, which is really nice. So after that we got the distribution phase, which is this here, and yeah, that's pretty much all of it for this AMD model. So you can see it everywhere on the charts. I'm going to show you one more example. As you can see, we got here one, and accumulation, manipulation, after that the distribution. After that we'll get one more time some accumulation, manipulation, and distribution. And okay, we got here some bearish AMD model, accumulation, manipulation, and distribution. If we take a further look, we'll see that we got two AMD models inside this one AMD model. If we get if you get now on higher time frame, which is 2 hour, so we are now on 2 hour time frame, we'll see that this was some accumulation, some range of price. After that we got the manipulation, and after that the distribution phase, which is really nicely done. So again we got some, we can call this accumulation, after that some manipulation here, and the distribution, which is not really nice because this movement was very sharp. Even if it was very sharp, this was on range. After that we got the manipulation phase and the distribution phase to collect this high here. Also we got a bearish movement, not the bearish movement, we got some accumulation, manipulation, and distribution here. But yeah, please guys, this only works including or in accordance with time. I'm going to tell you that 100 times because I don't want you to lose the money. That's not the point. Why would you lose the money if you don't have to? So yeah, that's pretty much all of it for this lesson. I hope you learned something, you understood what I wanted to say to you. So that's pretty much all of it for this lesson. I hope you learned something, and see you soon.